Welcome to the channel. Today is November 5th, 2024. It's election day. I hope you voted. Today we're going to be talking about when wealth is really made, not when we at all-time highs, but when we have a low in the stock market. Let's get straight into it. So as always, before we start talking about what we want to talk about today, we're going to go over the market. Before I even begin with that, I want to bring up something because today I'm going to be talking about the bear market that we're going to have coming. And that's when money is actually generated and made, not when we at all-time highs, but when we're at lows. So when those lows do come, this is the culmination, a book I wrote with a friend. It's a risk-free rate to outdo the S&P. You don't have to be an investor that follows stocks, real in depth. All you got to do basically is follow the news, know when to buy and when to sell. So what's going on in the market today? And it sounds crazy because the market is blowing. And here I am talking about how we're going to have a pullback like one we probably never seen in a long, long time. But I do want to be known as the guy that was out there notifying everybody, warning everybody across all these airwaves that we are in a market bubble and something big is brewing, and just be ready when that time comes. The Dow Jones today is up 342, NASDAQ up 218, the S&P up 55. Something of real interest to see here, the 10-year yield is still moving up. It's up to 4.32, which is incredible to me because the Fed meets this week. They think there's going to be a rate reduction. And here we are. We have the bond traders still moving yields up in the 10-year. Also really moving up the 30-year, not today, but just really putting pressure on interest rates for how much you can purchase a house for. So what we're going to talk about today is wealth is really made when we have a bear market. When we at these all-time highs like this, people are out there trading. This is a time that you lose money. As y'all know, I follow Warren Buffett. One of his sayings that he always have is be fearful when others are greedy and be greedy when others are fearful. And right now, we're in a time where people are being really greedy. Because this bear market, and I'm going to show it here in a minute, it's so easy to see. It's so noticeable that it's coming because our economy is doing horrible. And at some point, there will be a reflection in the stock market that's a reflection of our economy. People are struggling out there. I'm not going to talk about it today, but you can go look at the dollar stores. The stocks are doing horrible. They're warning. I mean, they're not making any real money anymore. That's because people on the lower end aren't purchasing anything. They're having trouble buying insurance. They're having trouble just finding somewhere to live, and they're having trouble feeding themselves. So it's written all over. It's so easy for me to see. I just don't understand why this stock market is really blowing. So what we're going to talk about today, we're going to talk about two things. The first thing we're going to talk about is Celanese, which is a company. The stock quote is CE. It's a specialty chemical company, and they supply both automotive and industrial segments. They reported earnings today, or they warned today, and they reported earnings, and it was bad. Earnings was down 87%, down to 120 million. They cut their dividend by 95%, and they're laying out plans of what cost-cutting measures that they're going to take. I mean, to me, it's obvious that the automotive industry is doing really bad. When you go by, you see cars everywhere. But the big automotive companies, Mercedes-Benz have lowered their margins 2 quarters in a row. But General Motors, Ford, they're doing pretty good. The owners of Dodge and Chrysler, they're doing terrible. Their company is going through real problems. So they're already kind of saying that they got to get rid of all this inventory that they have. But this is an example, just one example of how the automotive and industrial industries are doing bad. So things trickle from down to move up in our economy. But before we go into that, though, we want to talk about one more thing here. This is a article over the trucking industry. The global shipping industry is in a freight recession this year, and the challenged economic conditions will continue into 2024, according to a new CNBC supply chain survey. High inventories and a pullback in consumer spending are reasons behind the bearish outlook. And even though we're out here, we think we're doing well. The jobs report, the last one wasn't too great, but the GDP seems to be going up. I think it was up like 2.4%. But here it is. We're saying that the trucking industry is doing absolutely horrible. We'll skip down here. These companies have insights into orders shippers place into manufacturing companies around the world because they pick up the product from the ports as well as distribute products from warehouses to retailers. This part of the trade pipe gives investors a 3 to 4 month advance insight into retail consumer expectations based on the number of orders placed and the amount of product they have truckers move from the warehouse to the stores. It also provides a read on freight rates and what kind of freight volumes will be moving by truck and rail. The trucking industry has been doing bad for a while now, and it's not getting any better. So these two companies, and why I wanted to talk about the trucking industry and this company, is because they're at the beginning, basically, of the supply chain. The truckers move freight from, as they say, from producers of products to the warehouses, and from the warehouses to the retailers. And they're doing absolutely horrible. Just do a little bit of research. Truckers are being laid off. A lot of trucking companies have folded the last couple of years because it's just not a very, very good market. And it's the company we're talking about here. They provide supplies to automotive and industrial. That means that the industrial companies probably aren't making very many products because retailers aren't ordering. In the auto industry, if you ride by any plant or any car dealership, you'll see cars everywhere. So they're probably they're slowing down in manufacturing to get rid of their inventory. So if they're building less cars, that's first going to hurt their suppliers, and then there's going to be a lead into the manufacturers and then also the dealerships. So that gives us a good sign. That's why this is real easy to see. This is real easy to see, but no one's really paying attention, at least not the stock market. And as I said, the dollar stores are doing absolutely terrible. People just aren't out here spending. People are hurting, and soon, and as we see, if it's a lead time of 3 to 4 months. So if I had to guess, we're going to, in time, because this article was published like late last year. So soon we're going to have a read on what the retailers are having. And if I had to guess, the retailers probably have high inventory, so they're ordering less because people are buying less, but their earnings are probably still good because they already have the supplies on hand. And because they have the supplies on hand, they're not ordering new backfill, so their earnings look really good because they're selling less, but they're not buying more. And that's going to show in the future. So let's talk a little bit more about why wealth is generated during a downturn and not during a high. And if you don't have a lot of capital right now, you really need to start raising capital and prepare yourself for the downturn that's coming. And so if you ride the stock market down, or you don't build up capital to prepare. Let's say, in my lifetime, we had two really good downturns. We had a silent downturn in 2022, and we was down over 20%. And I really took advantage of that opportunity. So when the stock market is at highs or we are now, and I believe this is the highest stock market that I've ever seen or participated in my lifetime, higher than 2008, 2009, the stock market wasn't that overvalued. We just went through a financial crisis, a housing crisis, so everything pretty much went down. But when your stock market is as high as it is now, only two things that can happen. We can have very, very low returns into the future, which is why I'm pretty much all cash, and I'm purchasing T-bills because I believe that it's going to outperform and they're safer, and I don't have to ride the downturn down. So that's one thing that can happen. We can have very low returns. Let's say we might have 3 to 4% returns over the next couple years. Or we have just a washout where the stock market is down 20, 30, 40, even up to 50%. Because we was down worse in 2009. We was down worse than 50%. So if the stock market comes down and you start doing your purchasing, the stock market, America's going to be back. We're going to come back. I don't know how long the downturn will last. I don't even know when the downturn is going to come, to be exact. I'm not a market timer. I'm a value investor. So if the values are high, it's time for me to sell. And again, all that of being in the culmination. And then we mainly talk about just mainly purchasing the SPY and the QQQ, which are tracking stocks for the stock market. So you don't even have to really do that much research to build wealth. And as an example, the past 2 years, the S&P was up 20%. Both years. So those are really good returns to not even really be that much of a deep investor. But when the downturn comes and you're able to purchase really, really good companies, like example would be when in 2008, 2009, I purchased American Express at 10. I purchased Bank of America at 275. And these were all companies that I felt solid about. So when the downturn 2 come, I got the shares that I want to buy. I know I'm going to be buying Meta. I know I'm going to be buying BlackRock. I know I'm going to be buying Berkshire. I'm going to buy good companies with good balance sheets. And more than likely, I'm going to get good returns when the stock market comes back. So, and then I will be able to ride those. Actually, I think I gotta be honest with y'all. I think this one is going to be so big that it's probably going to be my last time really invest. I'm going to be able to purchase wonderful companies at such great prices, and I'm going to be able to ride them for years. An example, a Meta is up, I think like 570 something today. It was a stock I owned that I part of my selling operation. I sold that not too long ago, and it went up some more, but I would have never owned it if I didn't think it was not going to keep going up. But I can't pick a top. That's impossible. I thought at the time Meta was overvalued. I think it's a great company, and I would love to purchase it again. But if I can buy it at around 250, 200, something like that in this downturn, I'm going to load up. It's going to be a wonderful purchase that I may not ever sell it again in my life, because when I buy into a company, I never plan on selling. And it's just like rare opportunities that big bear markets come along. It's rare opportunities that we're so overvalued the way that we are right now that you got to take advantage of the opportunity to sell. So that's what I did. So again, money is really made when we have a major downturn. For my life, I did well investing throughout the years. I took some losses. I had more gains than losses, lucky for me. But when I had my real success was 2 times. 2009, when I was able to purchase stocks really, really low, and 2022, when the stock market just drifted down over 20%. I mean, I was able to purchase Amazon in the 90s. I was able to purchase Meta in the 90s. I was able to purchase Google in the 90s. And those all turned out to be really good investments. I was able to buy BlackRock at like 500. It's over 1,000 now. I sold that also. And you also probably be able to buy some really good companies like a BlackRock that's playing, or some of the banks, JP Morgan, their dividends, as the stock go down, obviously their dividend percentage goes up. And so that makes for a better investment. And so if I buy them real low and they're paying good dividends, I'm still getting the original dividends from my original purchase, even though my percentage will come down as the stock go up. But I invested that original money, so the dividend will be a really good payment out to me. So I'm going to leave you with, and it's really important to remember, be very, very fearful when others are greedy. And people are greedy right now. And be greedy when others are fearful. And that time is going to come. You have to be patient. You have to start saving up your money, start getting extra money so that you're ready for this downturn. Good luck investing, and we out.